myself when I left my job of 4 years in New Jersey to move out to Las Vegas. And one of them was getting more involved in the Jewish community. And so when I found Edge, I thought it was a really great opportunity to, get involved. So without further ado, I'd like to introduce our speaker, who is also my father, and founder and president of Lakeview Asset Management. And he will tell you a little bit more about what he does and, what's going on. So, Scott.
Thank you, Carly. And thank you everyone for signing in, tuning in, whatever you want to call it today. My name is Scott Rothbort. I have been in the financial services business since 1984, which is probably way before most, if not all of you were born. I worked for Morgan Stanley, and part of the time that I worked for Morgan Stanley, we lived in the Far East. Then we returned to New York for a short period of time, only to then move to London with NatWest. Came back to the States, and then I worked at Merrill Lynch. I ran one of Merrill Lynch's trading desks. I stepped off the trading desk to do special work for the chairman of Merrill Lynch. And then after 9/11, I parted ways with Merrill Lynch. I was, someone mentioned it before, but I was at ground zero, or across the street from ground zero, on 9/11. Shortly thereafter, Merrill Lynch and I parted ways. And as a result, I started up my own investment management business called Lakeview Asset Management. Now let me make sure I can share a screen here. There we go.
He's going to talk about.
Can you all see that screen?
What?
Remission. Is it a remission?
Do you see that screen that I just shared?
Yes.
Yes.
Okay, good. So I started up Lakeview Asset Management, which is an investment management business, in May of 2002. And what I do is I manage private portfolios for high net worth individuals. I'm also a frequent guest on TV and radio, including Bloomberg, CNBC, I-24, which I think you get over in Israel, as well as other networks. For 17 years, I was also a university professor at Seton Hall University. I'm no longer affiliated with them. And right now, I'm talking to you live from Henderson, Nevada. And again, thank you to Dandy and Carly for help setting this up today. The interesting thing is that we're right now in the middle of one of those strange periods of time where there's a lot of uncertainty, and uncertainty is something that really everyone hates, right? Whether it's in the financial industry, which way is the stock market going to go, or uncertainty, you met someone at a party and does that person like me or not? Uncertainty as to whether you're going to enjoy driving that car after you spent $30,000 to buy it. And with uncertainty comes a fair amount of concern and worry. And part of what I have to do is not only manage portfolios and think of good stocks to buy, but I have to understand how to manage during periods of uncertainty or crises, as we're in the middle of now. I want to mention that it's interesting when I was an undergraduate, at the Wharton School of Business. I had the opportunity to learn under a gentleman, Robert Shiller, who later on, many decades afterwards, won the Nobel Prize in economics. And this professor gave us all an assignment. And the assignment was that we were supposed to forecast a series of economic data points, such as unemployment, interest rates, consumer data points, so on and so forth. And we worked very hard, on this project, which was really a big part of our final grade. And we then had to submit a paper. It had to be 20 pages or more. And back in those days, you didn't have Microsoft Word and you didn't have desktop computing. So everything we did was typed on a computer, on a typewriter, rather than a computer. I handed in my paper with my forecast to the professor. And then about a month later, he then basically compared everyone's forecast to what actually occurred. Well, I was the last in the class in terms of my forecasts. But I got an A because you said that your methods and theory and the work that you did deserved an A. What did I learn from that? I learned that economists are very good at explaining the past, but they have no idea about what's going to go on in the future. And so while we're going through this period of economic dislocation because of COVID-19, the coronavirus, we can guess all we want as to what's going to happen, but it's very hard for us to really pinpoint what's going to happen. We have some ideas. I'll tell you this, in the long run, we're all going to be okay. All right? The economies will be okay in the long run. We'll be safe. You'll have jobs. If you don't have jobs now, you'll be able to travel. But in the short run, we don't know what's going to take place. And economists always break down what goes on in the short run with what goes on in the long run. And right now, the short run is very uncertain. The long run, as I said, I think we know where we're going. Okay, the United States is very strong economically. Israel, all right, is really one of the global centers for technology, and we should continue to see technology coming out of Israel. I don't know if any of you read a book by Dan Senior, and it was called. Let me find the book here for you. Hold on.
Meanwhile, I would like to encourage, while Scott is looking for the book, everyone else, you're welcome to start posting questions on our chat group. So if you have specific industry related, I know I have one which I will type soon, and then Scott later on can address each of the questions. We can read it out loud.
Well, my mouse is not working for some reason here. I don't know why. I don't know if it's because of the software that we're running in the background, but it's called Startup, huh? It's called Startup Nation. Yeah, the name of the book is Startup Nation, and it's a fantastic book, and it really talks about how Israelis think and how they've been able to develop technology, which is important, across the entire world. And so if you have a chance, I suggest that you read that book. It really is fascinating. Now, a lot of you are Israeli and you live in Israel. But, these two gentlemen really put together this book that encapsulates what makes Israel, from a technological point of view, great. So, the question, and by the way, over here, and now, I don't know, Carly, maybe you can come and help me here. I need a little technology help because it looks like my mouse died. I don't know, my mouse is not working. Let's see, I got it working now. Okay. First of all, here, let me find the book.
Maybe you.
I found it. No, it was. I think the battery got dislodged.
Oh.
But here's the book. I strongly suggest you read it, Carly. I have it like a Kindle version you can read. And so the question that a lot of people are asking is, are we in a recession? And the problem is we don't really know sometimes that we're in a recession, and we don't know sometimes until we're deep into the recession or we've come out of the recession. But what's a recession? A recession is an economic slowdown. The severities of recessions, differ. The recession that we had 12 years ago, which we called the Great Recession, was a very deep and long recession, and it really affected everyone around the world at the same time. Sometimes we have very minor recessions that don't last for a long period of time. They're shallow and short. But typically, economists will define a recession if we have 2 consecutive quarters of negative GDP, or gross domestic product. Now, these notes or these Q&As that I had put together come from some commentary I wrote on my website. And if you want to, you can go to the website. You can sign up for my commentary if you like. I usually write something every other week, sometimes more often, sometimes less often. It really depends upon whether or not something strikes me, something that's important that I want to write about. And this commentary goes out to my clientele, it goes out to the media, and it goes out to just, to people who, from a general interest point of view, want to get more information. So, a recession is typically 2 consecutive quarters of negative GDP. Now, understand something. You could have a country like Spain that is in a recession, but Italy may not be in a recession. Or the United States may not be in a recession, but China may be in a recession. China is in a recession. They just don't tell you, they hide it. China is not very open and honest about their economic data. So we look for 2 consecutive quarters of negative GDP growth, and we look for at least 2 months, if not more, of job losses. All right, when the economy doesn't produce jobs, we actually lose jobs. Okay, right now, both of those conditions don't exist. Okay, it doesn't mean we're not in a recession. We might be, right? But we have to understand what causes a recession. Okay, the primary cause of a recession is a tightening of credit availability, i.e., you can't borrow money. Why is that important? Well, businesses need to borrow money so that they can buy equipment, so that they can build a new factory, whatever the case may be. And if you can't borrow money, then you really can't expand, or you can't replace your equipment. Well, if you're a trucking company and you can't buy new trucks, well, you've got a problem. So that's why credit availability is so important. And what we saw in the Great Recession was that there was just basically a breakdown of the credit markets. You couldn't borrow money anymore. And what's also happening, obviously, during the Great Recession was that the banks themselves were in trouble. Some of those banks didn't make it through the Great Recession, and most of them had to be bailed out by their respective home governments. The second primary condition that will create a recession is excessive supply. There are too many cars. There are too many blouses. There are too many sneakers. There are too many houses, right? When there is an overabundance of supply, then what happens is the producers can't sell them, and they can't sell them at a price by which they can make a profit. So they have to lower their prices in order to clear the inventory out. And while they're doing that, they will close their factories. They will fire people. Okay, so oversupply or excessive supply is a very important condition that we look for in terms of recession. Right now, do we have an oversupply? No, we really don't. What's happened is we've had to shut down supply because we don't want people to be on airplanes or go to conventions, here in Las Vegas, wherever the case may be. And what we're going through now is a little bit different. Okay. And what we're going through now is a sudden shock to the system. That happened on 9/11. That happened when the Iraqis invaded Kuwait back in the early 90s. Okay. Some sort of what we call an externality or an exogenous event takes place such that you have a recession. Now, I'll say this, 9/11, before 9/11, the economy around the world was really humming along. 9/11 happened, and all of a sudden, economies around the world shut down. People didn't want to travel. Manufacturing was shut down. We were really concerned that these terrorist events were going to become commonplace. No one wanted to fly on an airplane. Airlines actually started to go bankrupt after 9/11. So we had a shock. And when you have a shock caused recession, they tend to be very short-lived. They tend to be shallow. 9/11 was a good example. Right now, you're living through it. You're living through a shock to the global system. We have this disease that we've never confronted before. Okay, now back in the 80s, we had HIV. HIV was very scary, but it wasn't the kind of thing that you can contract just by touching a doorknob that someone else touched who have the disease. Okay, the transference of coronavirus is highly contagious. You can get it if someone coughs, they breathe on you, they sneeze. All right, they leave a trace of the virus on a table. That wasn't the case for HIV. HIV was transmitted through an exchange of bodily fluids.
Scott,
Blood or, excuse me?
Scott, I'm sorry, can we just make a quick pause? We have some great questions from our audience to you. Maybe you can address them one by one. And I can just read, we got a question from Dorit. She's saying, I'm in Chicago and a real estate developer and builder. I have 3 luxury condo units in Chicago about ready to put on the market, but I'm nervous with what these times are bringing. Anything regarding real estate, how is this impacting the real estate market?
Well, whenever people are out of jobs, they can't afford to buy real estate, or they can't afford rents. The good news is that interest rates are very low and going lower. So the cost, to maintain, a piece of real estate, the cost to borrow in order to finance it is very low, and that's a good thing. The bad thing is that this particular recession that we have, all right, is forcing people to stay in one place. So it's not likely that people are going to be looking to rent or buy a piece of real estate now. Furthermore, what you're not going to see are people who are saying, hey, you know what? I am going to relocate from Oklahoma City to Chicago so that I can pursue my career. And this inability to relocate is going to hurt the real estate market. Now, What's also happening in this country is that we're having a geographic change, right? People, there's a huge migration going on in this country geographically. People are leaving the coastal states. They're leaving the high tax states. They're leaving the blue states. So they're leaving California, they're leaving New Jersey, they're leaving New York, they're leaving Connecticut, and they're going to Texas, Florida, Arizona, and Nevada. They are not moving to Chicago on a net basis. There's more people leaving Chicago than are moving there. And hence the demand for real estate is declining. New York City real estate has declined about 30% in the last 3 years. Part of that may be the economics of taxation, where you can no longer deduct some of the costs involved in owning real estate.
Scott, there's a question. Sorry, I'm interrupting. So there's a question, is it a good time to refinance mortgage?
Yes, it is.
Yes. So Ram, you got an answer. Yes. So I'm moving to the next question. It's about.
Let me just state something there. It's not so easy as in that. Yes. What I strongly suggest is not only do you refinance your real estate, but you shorten the duration of the loan. Mm-hmm. So instead of making your monthly payments less, you make them the same, but instead of owing money for 30 years, you owe it for 20 years. Therefore, you pay it off faster.
Thank you. Thank you. So the next question. The previous recession has been due to the big banks crashing, what ended up hitting the people. This one seems like the opposite. The recession is coming from within, meaning the people and the small businesses are going to get hit. What different responses should we prepare for by other sectors? Real estate, banking, small business. This question came from Itai. So if I didn't explain it well, Itai, feel free to jump in.
Itai, you want to add to that or?
No, I think she got it pretty much. I wrote it right before you started talking about it, but I'm really interested to know, because we're looking and trying to compare this recession to the last, but it's looking like it's something completely different because it's coming from the opposite side.
Well, believe it or not, entrepreneurship and small businesses are really what makes an economy move along. Yeah, I mean, we hear about all these large companies, Microsoft and Apple and everything else, but actually, you know, those large companies were very small companies 20, 30 years ago. I remember when Microsoft first came to the market. I remember when the first PC came to the market. And so today's small businesses, today's entrepreneurs are going to be the Google or Microsoft or Apple or General Motors, whatever you want to call it, of the future. So that never let go of that entrepreneurial spirit. Okay, that entrepreneurial spirit is going to be opportunities that you may not have by working for a large company. Did that answer your question?
It answered my question on the actual companies themselves, but what do you think there's going to be a different effect? Because you talked about it being comparable to 9/11, where it's a strong hit and possibly a faster recovery. Do you think that takes into effect because of the opposite hit, that it actually is going to be coming from within?
No,
because banks have money currently to actually help people and give more loans and give more line of credit to the business, and there's more wealth right now on the bigger company sides to help, you know, from the opposite end.
Yeah, banks are very healthy, and certainly American banks are healthier than European banks. but in general, they are extremely healthy. And so I'm not worried that there's going to be a choking off of credit so that small businesses can, can is going to have a long-term effect. But here's what's happening. What's happening is that there is a rush to find some sort of cure for the coronavirus. And that's part of the entrepreneurial spirit. And what will happen is, as people are trying to find...
What are you doing, yelling?
We okay?
Everyone, if you are not on mute, please mute yourself. Thanks.
As we're trying to find a cure or a preventative measure for coronavirus, we're actually going to be discovering other things. When we sent Apollo to the moon, okay, that helped to generate so many technologies that today we essentially take for granted. Computers, semiconductors, all these other industries basically were born out of sending a man to the moon. And so what's going to happen because of this coronavirus is that we're going to learn a lot about ourselves. We're going to learn a lot about disease management. And not only are we going to come out the other side better, right, but there are a lot of things that will be produced and developed that you couldn't imagine just a few weeks or months ago.
Okay, I'm moving to the next question. How can we support, this is from Sapir from Boston. How can we support small businesses and help individuals through this difficult time?
You shop or use the services of small businesses. Look, I'm a small business, okay? And you know, I get my clientele through word of mouth or people who have seen me on TV or have read my articles. But I'm a one-man shop essentially. Yeah, Carly helps me sometimes with my business. So does my wife on the legal side, but I'm it. I am the business. All right. And I make enough certainly to live a good lifestyle and put my kids through college, and you know, give them a good lifestyle. But I get my new customers through referrals and word of mouth. So if you know a small business person, okay, refer them or refer other people to that particular business. If you think someone's got a great restaurant that no one knows about, send your friends there.
Thank you.
If you know someone who makes nice shirts, well, refer them to your friends. And that's how you help small businesses.
Can I add something to that? Also, look for businesses that have in-store or thrive with in-store, like yoga studios. I just had a yoga studio that I used to go to in New Jersey. They're now live streaming. So I am now able to join my old yoga studio from Las Vegas. She is a very small company. She was always really great to me. So I was really happy that I could now support a local small business from across the country, just because the way that they've had to change their business structure for these next couple months. So if you know, and I then posted on Facebook, you know, letting everyone know that they're doing live streaming, you know, to support a local business. So if you can share on Facebook, share on Instagram, even through text message, word of mouth seems to have a really big effect, especially right now. So, you know, just in general, you see something, if you see a restaurant that's no longer, you know, doing in-store seating, they're doing delivery only, they're waiving those fees, support them because they're going out of their way to offer you things that they wouldn't normally offer you when you were had the ability to go in store. So just keep an eye out for things that small businesses are doing for you and then try and give back to them.
Thanks, Carly.
Can we, can
We
we
have
circle
another
back?
question. Oh, sorry, Eitan, go ahead.
I want to circle back to the main topic of this conversation. It's recession. And all the indication, part of what you said and other people said, small businesses are in collapse right now. If they don't get paid and there is no traffic right now, I don't know how long they can live. And maybe you should give me an estimate. What is the time frame where this local disaster turns into an all blown out recession that will be hard to stop?
It all depends upon the individual small business model. For instance, if you have a small business that operates out of the home, you're not going to be impacted as much as the person who has a shoe store, because people are not going to go and visit the shoe store. So it really depends. But to the extent that you use modern technology, it's going to work to your advantage and you'll survive better. Hey, Amazon today said that they're going to hire, was it 100,000 people? Some huge amount of people.
Yeah, but Amazon pays minimum wage. They're not going to help the economy. They're going to drop us down.
But you're wrong, because what happens is there is something called the velocity of money. Okay, and when you spend money, remember that it's not Amazon who's selling products on Amazon. It's small businesses that are selling products on Amazon and on eBay. Furthermore, Amazon is just not a marketplace. Amazon's biggest business is called AWS, Amazon Web Services. And Amazon Web Services is driving a lot of the cloud businesses that you take for granted these days. So the argument that they're going to be hiring minimum wage workers, I think, is spurious.
Okay, so if I drive Main Street in Miami, I drive Main Street, all the stores there are right now empty. They have rent to pay. End of the month is coming. Rent in Miami can reach out to numbers that will blow your mind, and I'm sure in Vegas too. What are you going to do about it?
Well, the last thing a landlord wants is an empty store.
He has to pay his bill.
Last thing a landlord wants is an empty store. So what a smart landlord will do is they will go to their tenant and say, look, I know you're going through hard times. And you renegotiate the lease with them.
I know a few landlords, they need to pay their loans back to the bank. If they don't pay,
landlords need to pay loans back to the bank, and they're going to go to the bank. They're going to go to the bank and they're going to say, you know what, we need to renegotiate also.
But the bank is going to tell them you already renegotiated, you're maxed out. You cannot get any more loans.
The last thing a bank wants to do is to repossess inventory or repossess buildings. So I'm getting a note, Carly. My internet connection is unstable. I don't know why.
I got
but it came from the software we're using here.
Yeah,
So if you just are going to close up shops, or you're going to foreclose on properties, it's a bad business decision. All right. So banks will work with their lenders.
Yeah, but they don't work fast.
And real estate operators will work with their tenants.
But they don't work fast. Getting a business loan doesn't take a day, not a week, nor a month. And if you cannot prove income, you're not going to get it. And banks do not. But
you're not listening to me.
I am listening, but I'm giving you a different
You already have an established business that has a storefront.
Yep.
They are paying rent to a landlord. The landlord is an owner of a piece of property. Okay. Well,
yep.
The tenant is not paying the landlord, therefore the landlord can't pay the bank.
All right.
So the owner of the real estate is going to go back to the bank and say, hey, you know what?
Yeah.
We need some help. We're not going to renegotiate our mortgage. We're not going to get a new loan. We need an abatement. We need you to say, okay, you know what? I won't pay you for 3 months now, but we're going to add 3 months onto the back end. All right. That's not going out and borrowing new money. That's just renegotiating the terms of an existing contract.
So the bank
And
will
that's what
agree for
happens
that?
because smart business people know how to deal in times of crises.
Okay, so this is rent. What
But
about
hold
all the
on,
other?
Eitan, we can't do all of it on real estate. We have some questions in other industries. So let me
All
just
right.
get to another topic. If we have time, we can go back to you. This question is about how much longer do you think this low price of oil will last along with its effect on the economy from the changes with OPEC, and how much less transportation travel? Do you think this will have a major effect on building more renewable energy projects?
Okay.
And then there was a follow-up question about in North New Jersey by Teaneck, gas prices have dropped to around 1.92 from 2.30. Yes, someone is saying that they're seeing also significant impact. So this question is about the price of oil and renewable energy.
So in 2014, you can read this. You can read this this commentary on my website. In 2014, it was the end of what we call the commodity super cycle. All right, all commodities by then had peaked and were falling down. Gold, oil, other commodity prices peaked, and they began to turn down. Oil began to turn down at the end of 2014. And all we're seeing now is just a continuation of the decline in the price of oil. The last chapter in that decline was the U.S. becoming sort of energy independent because we are fracking and through other methods of extracting energy from the ground. And now because you're having a price war between Saudi Arabia and Russia. Right? There is because you have a glut of supply. Remember, I talked earlier about when you have oversupply. When you have oversupply, you're going to have a recession. The energy industry is in a recession, and it has been in a recession for 6 years. And I don't see them getting out of recession anytime soon. So oil prices will remain low. All right, that's a good thing for the consumer. That's a good thing for producers. And we want it to remain so. Now, understand something. If the price of oil drops 10%, that doesn't mean that the price of gasoline is going to drop 10%. All right, because what happens is the price of crude oil is the price of the stuff we take out of the ground. But that goes to a middleman who is going to refine that oil and make gasoline for cars, make jet fuel, make heating oil, so on and so forth. So oil prices are going to remain low. They may trade between, let's say, 30 and 50, but I don't see it going over 50 for a sustained period of time anytime soon. And also, if you heard the other day, President Trump said that they are going to be buying oil. The reason that they are buying oil is not to help out Saudi Arabia or Russia or other producers of oil. What the president did was he was stocking back up on the Strategic Petroleum Reserve, or SPR. And what that is it is oil that we are warehousing in the United States, because the biggest risk that we have after a hurricane is that oil is not available. And we saw that with many hurricanes before. So the United States says, well, we don't want to take the risk that we're not going to have oil if another major hurricane hits. So we have all this oil that basically is being stockpiled, and that's called the Strategic Petroleum Reserve, or SPR. Hopefully that answered your question.
Thank you. We have another question. When do you think the Dow will stabilize? Is it in a month or 3 months or more? When do you think it will stabilize?
If I knew, I'd be making billions myself. Let me say two things. First of all, professionals like myself don't look at the Dow Jones as being the benchmark index. We look at the S&P 500. The Dow Jones Industrial is a poorly constructed index. However, because the Dow Jones Industrials has been around since the late 1800s, it's become part of the fabric of society. All right, but professionals like myself will look at the S&P 500. The S&P 500, as we now talk, is at 2518. Today we're up about 5.5%. The high was 3393. So let me just get out my calculator. From 3393, we went as low as 2380. So we had a correction of about 30%. What I am expecting is what we call mean reversion. In other words, we're going to go back halfway between the high and the low. Halfway between the high and the low would be about 15% off the high, which is about 2884. So I see the S&P 500 going up to about 2750 to maybe 2850, which is about another 8 to 10% higher. That will be basically the relief rally off of this correction we've just had. By the way, we're not in a bear market. Don't let anybody tell you that we're in a bear market. We're not in a bear market. Again, if you read my commentary, I explain why. Okay, we are in a very deep correction in the middle of a bull market. Okay, we had one in 1987. The market went down 22% in one day, but we didn't have a bear market. It was a correction. The bear market didn't begin until 2000, 2001. So that was actually the longest bull market to date. It lasted about 18, 19 years. So I would say you've got about 8 to 10% more of a rally. Yeah, probably more, maybe more like 10 to 12% of a rally. And then what the market needs to do is stabilize. We have a market right now that is rather dysfunctional. All right, we're going up 5% one day, down 10% another day, up 10% another day, down 5%, down 5%. Okay, we need normality in the market. All right, and that normality is going to be the S&P 500 moving in a historical way, which is, plus or minus less than 1% each and every day, continuously. If I had money now, if you had money, I'd be putting it to work in the market.
So someone asked, so the question is, but when do you think it will stabilize? When do you think it will become normalized?
Don't know. I don't know.
No one knows.
My guess is sometime in early mid-April.
Early mid-April. Okay. I just want to read something.
Yes.
Nevo said, just so everyone knows, especially small business owners on this call, that the government issued this SBA COVID-19 emergency loan by FEMA. So if you want to check more into that, you can. And then there's a question, do you think the market will fully be closed at some point?
No, you never want to close the market. The only time we ever closed the market in the United States was because of 9/11. Okay, because 9/11 took place on Wall Street. And all those firms had to relocate. Plus the fact back then, the exchange wasn't electronic or fully electronic like it is now. The only other time that we closed the exchange was when we had a Superstorm Sandy, and that basically flooded Lower Manhattan, and it just burned out a lot of the technology, and then they were able to move the New York Stock Exchange to another site and it was up and running. But you never want to close a stock market when you're in the middle of this volatility or external crisis that we're having, because then you send the message to investors that the market, the stock market is not efficient and is not open for business. You must be open for business. If that means that we go down 5 or 10% every day, so be it. Because I can tell you this, whenever countries have closed their stock markets, the day they open it up, it's pretty nasty.
Scott, I have a few questions. So people are asking, well, if we are to invest, where should we invest? What should we invest in? Hold on. General input on stocks, indexes, what's best, short, long, which stocks. And so, and another question, if you think we should invest, that means the worst is behind us.
Well, no, I'm not going to say the worst is behind us, but the best is yet to come. Okay, so let's not worry about what's going to happen in the next month or two from an investing point of view. Let's worry, or not worry, let's look forward to what's going to happen over the next 2 or 3 decades. All right?
And in terms of
the key to investing really is having the discipline to save. Now, Carly can tell you this. I go to all my kids and I have an investment tax and they say, okay, it's time to write a check and put more money into the market. My son, her younger brother, Stephen, did that today. I bought him some Amazon today. We're doing all right with Amazon. But think of this. Instead of going to Starbucks and spending $5 on a grande mocha latte, whatever the hell you buy there, okay, for $5 a day or $35 a week or close to $2,000 a year, make the coffee at home and invest $50 a week. All right, because the opposite of spending money is investing or savings. When you're young, you want to be as aggressive as possible in your investments. You want to look for growth. When you get older, you want to look for some sort of income-oriented investments, some investments that might be a little bit safer.
Scott, do you think it's wise to invest in oil?
No.
And why so?
There's a glut of oil. There's no opportunity there.
I'm just reading questions. How about mutual funds?
I wrote an article many years ago called The Mutual Fund Myth. Mutual funds are designed to underperform the market. They can't outperform the market, and they charge very high fees. Instead of putting your money into a mutual fund, buy an exchange-traded fund.
Now, what about some of the industries who have been for a while, but now with this emergency, they are picking up more, like Zoom or virtual connectivity? So any other thoughts other than Amazon and maybe not Starbucks?
Well, let me tell you this. I have 3 themes that I've overweighted my investments in. One is 5G, which is the next generation of technology. Excuse me, I gotta pay my wife off here. Yeah, just take the whole wild money.
That's the way you invest.
That's called an expenditure. So where was I? I just lost my trend of thought.
Talk about 5G.
So 5G is a theme that I have. Another theme that I have is the cloud. Another theme is diabetic related technologies and pharmaceuticals. And needless to say, in the last couple of days, I've invested in some companies that hopefully are going to be developing some sort of cure for the coronavirus. but you got to do your research. You got to know what you're doing. But there's a lot of opportunities out there.
Yes, and so we have only 5 minutes left to our call, and I'm going to ask one last question and put few into it. You mentioned exchange trader funds. Not everyone is familiar what it means. And then also, if you can also say something about Michael Berry's argument against the exchange traded funds, if you can say a few words on that.
Hold on, let me see if I can. How do I get the controls back here? Hold on, let me see something. No. Trying to get the controls back here. I'm not familiar with the software all that much, but I was going to show you something. Well, you know, I can show you here. Exchange traded funds are basically mutual funds of a sort that trade on the New York Stock Exchange or the NASDAQ. And probably the largest one, the most actively traded one is this one called the Spiders, the S&P 500. And what this does is this replicates the S&P 500 index. You've got ones that replicate the NASDAQ. You've got ones that replicate the Dow Jones. You've got ones that replicate the Russell 2000. I think it's that one. No, it's Korea. Hold on. Let's see. Oh, IWM. That's it. That replicates the Russell 2000. And then you have exchange traded funds that may be country specific. You have an Israeli exchange traded fund. I'm trying to remember the.
So that's what when you meant exchange trader funds, there are different kinds.
Yeah, there are many different kinds.
Okay, all right. So Scott, because we are about to 3 minutes left to our call, any words, last golden nugget that you can share with our participants, mostly young professionals. Some of them are really worried about their jobs. Some of them are really worried about their businesses and making payments. So one last golden nuggets that we can end up with.
My friend Jim Cramer says no one ever made a dime by panicking. You never want to panic. And understand the difference between worry and concern. You should be concerned over your businesses, but don't worry about it. All right? If something is keeping you up at night, you got a problem. All right? And your problem is that you're thinking about something that you can't control when the business is not open. And I think that's an important bit of advice that I can give everyone. Try to deal with items that you can control. None of us can control the coronavirus, but we can control our own businesses. We can control the quality of our services, the quality of our products. That's what you need to do. But sometimes going through rough times like this is one of life's lessons. And it's hard and it's not good. But if you have a business, then the best way to ride out the storm is try to cut back on expenses. It really is. And however you may do that, you do that. Maybe that means that to save your business, you have to lay somebody off. Or maybe you've got to order less of your, inputs, product inputs, materials, whatever it may be. Eventually things will come back. And when they come back, they're going to come back with a vengeance, because right now what we're seeing is both a supply and a demand contraction. When the coronavirus concerns are gone, you're going to have a tremendous expansion in demand because we have all this pent-up demand. Everyone's staying at home. No one's going to the movies. No one's traveling. No one's buying a new car. No one's buying new clothing. All right? That will all go away, and all of a sudden you'll be fighting with people to get, that piece of clothing at a store. So don't panic. Don't worry. All right? Just think things out. And well, let me put it this way. Everyone should have their own group of professionals and friends and mentors who, when things are tough, you can go to in a confidential way and think things out with them. And so you've got to build up your own, what I would call, personal board of directors. I have mine. When times are tough, or when I want, when things are uncertain, there are certain people I can reach out to and have an intelligent conversation with. And you should all do the same.
Thank you so much, Scott. Our time is up. I can't thank you enough. We may get some more questions and we might be able to forward it to you via email. You've been very helpful. And I want to tell everyone else on the call, the IC Edge is your network, is your to go to. If you have questions, if you need an expert in anything, we have a very big outreach where we can help you get again, as I said earlier, an advice, just a pep talk, because we are going to get through this together. So hopefully we'll meet tomorrow again with staying virtually engaged with your customers, especially now. And so hopefully we'll see you all on the call and bring your friends. Have a great day and keep up the smiles.
Thank you very much for inviting me.
Thank you,
Thank
Scott.
you,
Thank you,
Scott.
Carmen.
Thank you, everyone.
תודה רבה.
Thank you very much.
Thank you.
Thanks a lot.
You're welcome.
Shalom.
Is there before you leave, is there an email that anyone can directly email you questions to, or would you prefer to give them?
Go to my website. It has all my contact information there. They can sign up for my commentary, and there is an email. There's a general email address there. So.
Okay, great. Thank you.
Okay.